From an idea generation perspective, I think it's great to have this opportunity. And 10 years ago, we probably didn't have a wide enough horizon and information available at our fingertips to actually source ideas. And pretty much, again, quoting Reid Hoffman, fragility is the price we pay. I think it's still early days in terms of, all these conversations happening. And even 5 years from now, it may very well be that, this is it, you get positive stories and negative stories. And no matter what happens in this type of, online discussions, you're always going to be wrong or right, but the message gets amplified. And this is pretty much what we've seen in the capital markets for the past 100 years, if you want. So I think there's quite similarities between these two markets. You just have to look deep enough to understand. Now, social in general may provide us a little bit more qualitative insight that a simple or a plain or a regular analysis would give us. So you can actually understand, but because you can understand and other people and would pick up the same understanding, they'll simply amplify from there. So I see opportunity in this type of volatility, if you wish, and again, based on my experience so far, there's very little evidence that actually, as general conversational participants, we would actually pay attention to this amplifying kind of effect and signal or noise, if you want. We do nothing better than engaging conversations, in general speaking. So it might take a while until you would see a larger propagation with a general retail investor. Again, largely part and partially because of some of those biases that we've covered earlier in the conversation. You tend to be involved in all these discussions, but I see very little evidence in terms of kind of taking the next steps. What now? What can I learn? Right. So learning how to learn, I think, is much more important in this case, rather than simply being part of endless conversation in some cases.